What I'm about to share is based on my unique experiences. And from my perspective, it's factual. And you can tell me what your experience has been. But I've come to realize that leaving our money in a bank is one of the worst mistakes that we could make. And I'm not saying don't put any money in a bank. You just shouldn't put too much money in a bank. And I'll tell you exactly why, and I'll tell you what we do instead. What I'm about to share works whether you have a little bit of money or a lot of money, because I've been doing this coming out of a situation where I was born into poverty in my late teens going into my early 20s, because you can start small despite popular belief. Now, let me declare I'm not a financial advisor. I am sharing my own experiences. I always recommend that you have dialogue with a financial advisor or a loan officer, or depending on what it is that you're looking for, whoever is capable, competent, and qualified in that space, they're who you should seek advice from. I'm just sharing my experiences. Do you remember? Well, probably most of you aren't even old enough to remember this. So you'd have to be close to my age, which is near 50. There was a time when banks actually took our money. They found creative ways to invest that money, whether it was in real estate, whether it was in lending persons at a higher interest rate than they paid out, or just different ways to do it. And what they would then do is turn around and reward us as customers of the bank who is saving our money there with an interest rate that was actually close to being decent. Nowadays, if you look at the average financial report from a bank, you're going to realize that a large chunk of their profitability is coming from the fees and the different administrative costs, the commitment fees. I mean, there are so many fees. I'm going to give you a list shortly, but that's where most of the revenue is coming from. It's no longer, or there's no longer a desire to take our hard-earned money, invest it creatively, and pay us an interest rate. It's still pathetic, but it's better than what we're getting these days. Things have changed. The focus, based on what I'm seeing, is primarily charge them fees for everything. Whenever they don't use their account, you allow it to go dormant. I mean, I had an account for my son, and it had money in there. It was decent money. And gradually, we weren't doing anything with it. Gradually, it went to $0. Where does that money go? Who owns that money? And then when we reactivated the account, it was still $0, and we had to replenish it with funds. So it leaves you to wonder, since a lot of banks have deviated from their initial objectives when banks were created way back then, why should we trust them with our money? Or why should I trust them with our money? Because remember, I'm talking from my perspective. So that's the first reason why, and I can feel the raindrops. So I'm going to head back inside. That's the first reason, because while I'm waterproof, my camera is not. So let me run back inside. But that's the first big reason why we do not put our money or save money in a bank. Now, because despite these measures, if you look at the bank's profitability, it has also improved dramatically in most cases. So you would think that compared to back then, our interest rates would be better. No, it's not. This is another reason why we don't save money in a bank. The interest rate is significantly less than 1% per annum or per year. Now, what I've come to realize is, especially starting to invest a few dollars from my late teens, is that with minimal risk, I could get 5% in interest per annum. There is risk that is involved. Again, you need to talk to your financial advisor. Don't do what I'm saying. This is just my experience. But with minimal risk, I was able to get 5%. And with a high risk appetite, which is where mine is right now, I'm getting anywhere from 7 to 9% in interest for bonds, for diversified index funds. Let me give you some examples. If you live in Jamaica, there's South Power, which is the parent company for JPS. That's a bond you want to invest in because, people will always pay them electricity bill, right? That one requires you to start at a higher level, but there are other bonds out there that will pay you as much as recently, especially 10 to 12% if you're investing in Jamaican dollars. I primarily go with US dollars, so I'll get up to 9%, which is considered high risk. Now compare 5% if you're being conservative to 7 or 9% if you're being aggressive. And if you live in the US, the S&P 500 is an example of an index fund that actually pays on average over the years about 7%. There's a lot out there. All you have to do is to go to ChatGPT and say, this is where I live. Give me some investment instruments to include bonds and index funds that I can invest in that will pay 5 to 9% in interest per year. You're going to get a long list. You're going to get their contact details. Remember, vet it with your financial advisor because I'm not one. Anyway, there are a lot of ways out there that you can make 5 to 10%. Why settle for less than 1% in interest? And when I see the little interest come in from the bank account for the few dollars that we have there, and then the fees come and tackle the interest, God bless what left. Translated for those who don't speak Jamaican patois, we have to be grateful for what is left because it's usually pathetic, right? Now, I have always believed that the greater the risk, the greater the reward. And a lot of people think that their money is safe in a bank, but did you know that there's a deposit insurance for your funds? And as an example, in Jamaica, that deposit insurance is $1.2 million. So if you have more than $1.2 million and something happens, and this is, I believe, per account, but I stand to be corrected. But if something were to happen to that particular financial institution, let's say they had to go bankrupt or they had to dissolve, whatever it is, and you have 5 million, you're insured and you have coverage for 1.2 million, all you're getting back is 1.2 million. Dog, name your supper, and the rest of the difference between your 5 million and your 1.2 million. So a lot of people like to say it's safe, but is it really? I'll leave you to make the determination. But if you want your money to work for you, you invest it. You talk to an investment advisor and you find something that matches your risk appetite and you take a chance on yourself. Inflation is another factor. Sometimes we put the money in the bank, we're getting interest at less than, some pathetic, significantly less than 1%. And inflation, meaning prices are increasing by 4 or 5%. So your money every year is dwindling. It's losing its value in the bank. Whereas if you invest it, take a little risk if you're up to that, and you're making 5% or 4%, at least it will retain its value if the inflation rate in the country where you live or where you're investing is on par. If it's higher, like I tell you, my risk appetite is at 9 and 10%. If it's up there, then it's always making a profit. The next reason why we don't save in a bank is because the service is mediocre in most banks. It's not every bank. And I mean, when you hear some of the stories, the horror stories out there, but I realize despite the horror stories, people are still loyal, so they keep banking. That's you taking a chance. I have no interest in doing that. I bank here in Jamaica at CIBC or First Caribbean. I've been doing it for years. That's the only bank I bank with that I have a relationship with. I mean, there's money elsewhere, but that's where we go predominantly as a family. And no bank is perfect, but they're the best I've seen. And they can't pay me for this ad. I probably should see if I can get some money for saying this. But anyway, this is some free ad for them. And it's the truth. When I ran an organization that had 6,000 employees, I was in charge of all the different locations. This bank actually came into our site and opened bank accounts for our staff members. When we had issues, it wasn't just the managers who got priority attention. every level of staff was treated the same way. Customer service is a problem everywhere. It's not just Jamaica. But when it comes to banking, I realize that there's a lack of care and concern that's coming from most banks. And if I already am getting peanuts for saving there, why am I going to take bad treatment? Hell no. I'll take the chance. But you have to decide what is best for you. Another reason why we don't typically save money in a bank or put a lot of money in a bank is, and this one actually works to our favor, believe it or not, but I still don't like it. It's inequality and favoritism. Did you know that interest rates vary depending on who is asking? And I can tell you this because I've said it many times. I was born into poverty. When I didn't have much and I go into a bank, I had to take whatever interest rate was on the board. And this is why I say this now works in our favor, but I still don't like it because I know where I'm coming from and I know that a lot of people are still there. And this is where you just don't have the opportunities. You may not have the knowledge to negotiate a lower interest rate. I don't like that. If a if an interest rate is there that's lower than what's advertised, there should be specific parameters, and the bank or the financial institution should be very transparent about who will qualify. It can't be based on the level of influence that I have or the amount of money that I have, because frankly speaking, because of that system, which is so informal, the poor people, which is where I'm coming from, we get the worst interest rate. And the ones who are more affluent or have a few more dollars or have a lot more talk, they tend to get a higher interest rate. And I just think that's wrong. Another reason when it comes to inequality why we don't do this is, do you realize that some banks will trade, they'll sell US dollars at a certain rate and then buy it at a pathetic rate? As an example, there are banks out there until recently who were selling US dollars at 155 and buying it at 130. How cruel. You can imagine the profit that they're trying to make off every dollar when you go to the bank. Like my mother went to the bank and she was trading US dollars, right? She was, giving her money over. She got $150. She happened to need some US dollars, but this will happen to you, mommy, because you know where to get US dollars. But anyway, she happened to need some in a kind of last minute scenario, and she went to the bank. Now she had just sold or given them her US and get the 150, and now she needed to buy back some 130. That's $20 difference per dollar. That's just wrong. It's unfair. It's unethical. Banks, you need to do better. The next reason is there are too many fees. There is the monthly maintenance fees, like the service fees, the ATM fees, whether you're in the network for the ATMs or out of the network, meaning if you draw money from your bank ATM, you may not pay a fee or you may pay less than if you draw it from another bank. It's like they're trying to punish us for not having access to certain things or not doing things the way they want us to. There's the transaction fees, the overdraft fees, the insufficient funds fee. I don't even know what the difference is between the overdraft fee and the insufficient funds fee. But if you know, you can tell me. I have no idea. I just think somebody is making up these fees to bring forward or to result in higher profitability. I can't say anything else. And there is, of course, the wire transfer fees. So why would I put money that I've worked so hard for and keep it at a place, save it at a place long term, where half of the time when I try to get access to it, fees are eating out so much of it. It just doesn't make any sense. And I'd say the last reason is that there's just a lack of care and concern. And, this is one of the reasons too why I'll always remain loyal to CIBC First Caribbean. Again, the need for pay for this video, Anyway, during the pandemic, as an example, or during difficult times, banks typically want you to pay over your loans, your mortgages, whether you end up losing your job because everybody at your workplace lost their jobs, or because they cut back your hours by 50% during things like the pandemic and so on. I can tell you that the care and concern that I've witnessed back then, I would suggest that people go to their bank and, have conversations with their banks on how they can either waive payments, offer a moratorium, or something like that. And they did not, most banks didn't. The first bank that I know of to offer a moratorium, however it's pronounced, was CIBC First Caribbean, and they didn't discriminate as to who they gave access to this moratorium during these difficult times. And because of that inconsiderate nature and that sheer lack of concern, might as well put my money on something where I have more risk because I'm not getting the love because the banks ain't showing me no love. That's just my perspective. Now, what do we do instead? What we do instead is we act like we're the bank. Remember, banks are supposed to take your money, they're supposed to invest it, and they're supposed to use it in different ways, creatively that is, not just charge fees, and give you an interest rate. If you have access to financial knowledge, you can get it through books. There are credible people on YouTube who share knowledge from an investment perspective. There are a lot of investment and financial advisors out there with different organizations who will provide services for free when it comes to financial advice, especially personal financial advice. Talk to one of them who is credible. I have a rule, however, when it comes to financial advisor, because I will never have a financial advisor who is not doing well financially. Think about it. It's like going to a dentist that has bad teeth. No, you don't have to be wealthy as my financial advisor, but you can't be coming out of debt and, boxing around your money and being irresponsible. So I recommend that you select a financial advisor who has been where you want to go or is on the path of getting to where it is that you're trying to get or what you're trying to achieve. That said, talk to your financial advisors and they'll give you options so you become the bank. They'll give you options where you can invest in real estate. And despite popular belief, you don't need to have a lot of money anymore to invest in real estate, especially if you live in the US like most of you watching. There are companies out there like Fundrise, and Fundrise is a real estate company or organization where they'll have a project. Let's say they have a building to put up. That structure is 100 million US dollars. Different people can come in and invest 1,000 there, a 500 there, a 10,000 there, and you get the percentage of interest that's in alignment with what your investment is. So you can actually start small using companies like Fundrise. And there are a lot of others out there. Just ask ChatGPT, give me companies that are similar to Fundrise in my country or in my location. I can't think of any in Jamaica at this point in time, but there are developers out there. You just have to be careful as to who you decide to partner with, who will allow you to invest in a property because they don't have all the money up front and they'll take a few dollars from different people that they know. Be careful, however, because not everybody has moral standing and not everybody is honest. Now, in operating like the bank, you're able to get the interest from what they would have invested in directly. Basically, you're cutting out the middleman, but this requires risk. So if you don't have a risk appetite, do not go down this path because you can lose and you can gain. Now, the second thing that we do is I personally stopped using debit cards. So I have a debit card, but it's for emergency and I never use it because I have to pay fees to use it. Instead, I get a credit card that's a rewards card. And I also get it from First Caribbean. Now, the rewards on this card is the best I've seen out there. I think it's 2 to 3% of whatever you spend. But here's the best part. You don't just get miles. You actually get a dummy credit card, like a digital card. So you can use your miles to buy anywhere online using this digital card. This past year, last year we had a lot of investments. We use the card a lot. Every month we have a lot of investments that are pulled from our card. As an example, we pay index funds and a lot of people will do bank transfers for index funds. No, when you have a rewards card, let the index fund company pull it from the card so you get the miles. Last year alone, when I checked to see, after a year of using that card, and both my husband and I use it, and we use it for business and personal expenses, the rewards amount on it was equivalent to 3,800 US dollars. That was a really nice birthday gift the other day, because it was kind of money you don't plan on getting, because you spend and you don't expect anything return in most cases. The next thing that we do is we use the bank as a temporary holding spot. So basically, what is in the bank is coming from either income or different transactions, and it stays there until it gets to a certain amount. And from there, we either invest it, we buy something with it, or do something else. So that money is either for an emergency fund, because you need access to your emergency fund. So you need to keep it usually in a bank account where there's no wait or anything to get to it when you need it, or if you need it to invest in something or to use it for something else. So it's kind of a holding point for the money. So we're not saving it there. It's staying there until we're ready to do something else with it. And the minute it gets past a certain amount, we definitely have to move it out, because now your money is not working for you anymore. And like I said, there's a lot of risk in what I'm talking about. So make sure you talk to a financial advisor, because I'm not one. But those are the reasons why we don't save in a bank. Please tell us, or tell me in the comments, what your experience has been. I'm eager to hear, wherever you live across the globe. I know most of you watching don't live in Jamaica, but a lot of you are Jamaicans living overseas. A lot of these experiences I'm talking about, I've had them in Jamaica and overseas as well. So it's not limited to my geography. But I find that, especially like the service and so on, it can be improved here. I hope you got value out of this. And as usual, I'm going to have to run. Talk to you soon.